segment is Ask Annex. It's where we go to the mailbag at annexwealth.com when people click the Ask button and we answer the questions. As always, if you don't want us to use your name, that's fine. In fact, everybody took us up on that. Everybody is anonymous. In the studio, Sarah Kyle, Wealth Manager at Annex Wealth Management. Hey.
Hi, Danny.
And we got Trevor Nargis, Senior Trader, part of the investment team. Welcome to you.
Hey, Danny.
First one is anonymous. My son has a new job with a 20% increase in pay. He lives frugally. What can he do with the extra income?
Well, that 20% increase is really nice. Congrats to your son. But he should make sure he's maxing out his retirement plans, both the employer and the IRA. And if he has extra income after that, I would suggest putting a portion of that extra income into an investment account and just having that disciplined investment strategy where he's taking a monthly amount and putting it into that account every single month. It'll really pay off in the long run and give him a lot of spending flexibility in the future. Make sure he's paying off any debt he has, and then I would also build an emergency fund. Typically, we like to see 3 to 6 months worth of living expenses.
Next one, anonymous. Aren't defense contractors poised to have a strong run? Boy, you'd sure think so, but it's a complicated process.
It is a complicated process, and I'm glad that you started it off with that. So, we're seeing an increase in geopolitical tensions following the war in Ukraine, and it's still ongoing. This is manifested in Europe looking to increase their defense spending, and that could benefit some of our domestic defense contractors given their expertise in the space. But there's another thing that you got to take into account there. Many of these names are trading at premiums to their historic valuations, so their valuations have gotten a little up there. We've been following a couple names that we've been keeping an eye on quite closely as potential ads or companies that we find quite interesting. But right now, the risk reward from a valuation standpoint is a little stretched. Now, it doesn't mean that the price couldn't go higher here. They could continue to have a strong run, but from a valuation standpoint, they seem a little stretched.
Next one, anonymous. What's more important, desire for growth or income generation? I plan to retire in 10 years. I'm getting conflicting advice.
Well, we love to say it all depends, but both the growth and income generation can be a very important part in different financial contexts. If you have long-term financial goals such as building wealth, saving for retirement, or achieving financial independence, a desire for growth may be more important. However, if you have those short-term financial goals such as meeting regular expenses or supplementing your current income generation may be more important. So it really depends on your particular situation.
Well, yeah, and it doesn't have to be one size fits all like you're saying, right? Mm-hmm. You can have different buckets. You can have that growth bucket. You can have that income bucket. And, we talk about it pretty frequently here that it also comes down to your risk capacity versus your risk tolerance.
And you can probably change your strategy too later on. You can be growth oriented up until retirement. And then if you feel you want to supplement your income, we can do more of an income generating portfolio.
Here's a good one. Has anyone successfully timed the market, at least somewhat? If so, who?
Let me start with one piece of wisdom here. Let me say that market timing is, one, extremely difficult, not super easy at all. But two, many investors have emotions and different signals that come into play, and that can get in the way of putting money to work or taking exposure off the table. And what typically happens for most investors when they try and market time, they end up kind of doing the exact opposite. They end up buying high and selling low as opposed to buying low and selling high. But there are plenty of institutional and professional investors who have timed the market over the course of history. And we could do a whole show on it, but I don't think you'd want me to do that here, Danny. One what we'll focus on here is Jim Simons. Jim Simons founded Renaissance Technologies, the hedge fund. He's a mathematician by trade, specializes in technology, worked on code breaking in the Cold War, things like that. But what Renaissance uses are quantitative models and algorithmic trading to move in and out of different areas of the market. Their medallion fund is their most famous fund, and it's only for employees. But that medallion fund is compounded at 62% annually before fees from 1988 to 2021. They charge a pretty hefty fee given the sophistication of the strategy. So they have timed the market, they continue to do it, but there's a lot of tech that goes on in the background. There's other people who, has been more of kind of a feel and research in certain instances, but there are people who do it.
And then there's a whole parade of people who didn't.
There's a whole parade of people who try.
Yeah, Dave Spano often says timing the market is like trying to, catch a falling knife. Final question on Ask Annex. At what age do long-term care policies become unaffordable?
Well, the ideal time to buy long-term care insurance is when you are in good health and relatively young. So I would say late 60s is probably pushing it a little bit. But it all depends on your situation and if you can pass the underwriting process.
Do you lock prices in when you buy them younger? Mm-hmm. Oh,
Yeah,
okay.
it's definitely, Now they have level plans. Long-term care is so much different than it used to be. It used to be where companies could raise the policy premiums so much so that by the time you needed that long-term care, you couldn't afford the premiums. So you pay in for 20 years, and then when you need it, you have to let the policy lapse because you can't afford it anymore. So now there's what's called level premium, and then there's a lot of hybrid policies life insurance policies that include long-term care. So a lot of options now.
Sarah Kyle, Wealth Manager at Annex Wealth Management. Thanks.
You're welcome, Danny.
Trevor Nargis, Senior Trader. Thank you.
Appreciate it, Danny.